It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
And I want to tell you, we're going to keep you up to breast so you're the smartest people in the world when it comes to that end of your financial picture, because we keep you in the know. And again, if you have any questions, you can give us a call, 803-0930, 803-0930, star 930 on a cell phone. The 1-800 number is 616-9236, toll free outside the area. What?
That's usually Chris's job.
I know, but I decided I was going to learn it.
Amen.
You know, you can teach an old dog a new trick. A couple of things. The tax deadline is October the 15th, which is today, which means that that extends the deadline to the next day, which is a holiday. It's Sunday. And so the next business day is the 17th. So anybody that had filed an extension has until Monday midnight to get their 2015 tax returns in. And I think you heard Tiffany Fabian. Hey, Tiff.
Hey there, Esther. How's it going?
I'm good. And Christopher Fabian.
Hello, Esther.
So I understand you got your doggy back and you got your house and you're all happy.
Yes. Life is becoming more normal. So, you know, for the first time in forever, we'll get to pass out Halloween candy because we used to live on an acre of land
in farm country.
Yeah. So we'll get to see kids knock on the door.
Now you're going to be in a subdivision, right?
Yes. Yeah. It's hard for me to get used to, but my husband, this is more or less what he wanted, and this is where we are. So,
well, that's good. That's good that you're working it out.
Yes.
Okay, so I wanted to let everybody know there's things that are new in the news this week, and there's 77 days till tax time, till January
Bite
the 1st.
your tongue.
So that's not that long. And so we're here. We're going to talk about all the things happening in the news, all your questions, all your comments. Our tax school started last week, right, guys?
It did. Started on Thursday and Friday, and online started today.
Well, that was just the
intro for the
right.
online. Online's going to really start next week. So,
right.
So people that want to get in would still have the opportunity, right?
Right. For the online, and, you know, we're using Zoom, where it's a very great, interactive, user-friendly.
Yeah, what's so cool is when we first started doing the online schools, you know, it was basically some student out there would upload a canned presentation and there was no interaction. Now we use Zoom, and so we actually see all the students who are actually sitting home in their pajamas. We hope that they put on more than pajamas.
Yeah.
Because we can see them, and we can ask them a question. We can say, hey, Pete,
right.
In Cheektowaga, can you answer this? And in this way, it gives you the sense and the instruction as if you're in the classroom setting. So it's so cool. You can be home, and then after the class, it's uploaded to the cloud, so you can download it and look at it again and again and again.
Yep.
Right. And I got to tell you, we had a 70-year-old man in our online class, and he used Zoom, and he goes, "If I can do this, anybody can do this."
And then, of course, October 29th is our seminar with the financial guys, and there's going to be people there talking about benefits and 401ks, and we're going to have a presentation about taxes from A to Z and business taxes.
That's the other thing. If you're a small business owner, because myself and their benefits guy is going to be doing the small business owners seminar, you really should come, because I can't tell you how many times we see small businesses that are structured as a C Corp. They really should be an S Corp. And by making that election, they save thousands and thousands and thousands of dollars. And, you know, if you're sitting out there and you're thinking, oh, I just don't feel like going, we're going to make it fun and really easy for you to understand. And who knows, you know, knowledge is power.
Right.
I
Right.
think it's power.
Right. And then also, I sound like an advertisement, but you got to register for these things too. So I guess that's why I'm saying it. January 21st, Russ Gullo is having a real estate seminar, and we're also invited, and we're doing a presentation there at Russ Gullo's event. And so we're really excited. And
Well, what's really great is to have the community consider us the experts in taxes, and we're
Yeah.
very honored. And of course, we just love helping people. So
That's right.
that's the name of the game, as far as I'm concerned.
the bottom line.
Right? Okay, so stuff in the news. And again, if anybody wants to register for school, they can still join the online class, right? You guys?
Exactly.
Yep. Just call 632-7886 or go to egtax.com and you can
They
register,
can register
that way.
online.
That's right.
And the instruction is free.
Yep, it is. You have to pay a minimal fee, like $89 for the book and
For
the
the
textbook
book.
and the
Right,
workbook.
because somebody wrote the book for us and he won't give it to us for free. We say, can't we have it for free? And he says no. Okay, so all right, items in the news. They caught, you guys, we mentioned this last week, Chris. They caught the scammers in India. We are so happy about that.
Yep.
Yeah.
Talk about that. Who was the scammer?
Oh, well, these call centers in India, they busted 70 people, and they would call you up and say, "Hi, I'm the IRS. Would you like
Send us some money."
You owe us money for tax year," and you could ask them questions, and they couldn't really answer you, but they knew sort of how to answer to scare you. But I also read where there's about another 640 people they're looking into to get them too. So
The bottom line, if anybody's calling you on the phone saying, we need $10,000 or else we're going to come seize your house and your bank account, those people are scammers. The IRS doesn't do that. But what they are doing is a fake CP 2000 notice.
Yep.
So you have to be real careful about that if you're getting a CP 2000 notice to make sure that it's legitimate. And that's something that EG Tax will do
Yeah.
for you. So if you're not sure,
And
give us a jingle.
A CPE 2000 notice is something that comes in the mail. So now they're escalating it to not just phone calls, but they're mailing you things,
I mean, they are, and they are really good.
right.
I mean, they are really good.
To-
I mean, if you didn't know taxes, you might be tricked into paying them. They've made hundreds of millions of dollars doing this scam. So thank God they got arrested. The other thing is the IRS is aggressively going back after members of LLCs to make sure that they're paying their FICA on all the pass-through income, which just makes sense to me, but there's still some question as to whether or not income on an LLC is going to be subject to FICA. But the IRS is taking the position on a recent court case that it is all subject to FICA. So if you're a small business owner, LLC, and you need any help with that, we're happy to help you with that. The other thing is we said extension deadlines move till Monday, so we can get you done. If you want to call us at corporate headquarters or go to egtax.com. And then the other thing
while you get on that topic, sorry, you can also, if you filed late returns like 14 and 15, we can e-file those returns too. And so now's the time. It sort of chimes it in your mind. If you haven't filed for a while, we can do prior years electronically for a little while longer.
Right.
Like Monday.
All right. The other thing they just announced per diem rates as of October the 1st have gone up to $148 for meals and housing, $51 for meals, $97 for housing. And if you're a DOT driver, it's higher. You get a higher rate than somebody that isn't DOT. You guys can explain that?
Right.
Department of Transportation. Go on, Chris.
Right. You get where your per diems for a regular person is subject, you lose 50%. So they're really, they're giving you
only get 50% of the deduction,
right?
right?
You get
But if you're
$51 as a
DOT,
write-off.
How much more do you get?
You get 80%.
Which is an extra 30%. So if you've been doing your own return and you are licensed DOT driver and you've been taking per diems and you've only given yourself a 50% deduction, you're entitled to 80%. And so you should amend your last 3 years returns and get the money back.
That's right. That's right.
I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on a cell phone. Our toll-free number is 1-800-626-9236. This is WBEN. I'm Ask the Tax Lady. We're going to take a short break, and we'll be back on the other side with your questions.
Caramba, fiesta, forever. Come on and sing along. We're going to party.
I love this kind of music. It's so mellow. And I'm Esther Gulius, the tax lady from EG Tax. We in studio with Tiffany Fabian, Christopher Fabian. We're talking about money, taxes, and all that kind of stuff. And if you have any calls, questions, 803-0930, 803-0930, star 930 on the cell phone. And before we get to our callers, let's talk about, we're going to kind of cover taxes A through Z. And so looking at 77 days left before tax season. Before I do that, I want to talk about protecting yourself from fraud and identity theft. There's 41 million people affected by identity theft and fraud. And here's a couple little things that you might be interested in. Don't throw out your old bank statements, shred them. Right?
Yes.
That's a good idea.
Really good idea. Identity theft is like huge on the rise. I mean,
it really is. I mean, let's face it, these guys in India can steal your identity and steal money from you. So it's so important. Check your credit report every 6 months and question any unusual items, because truthfully, if somebody is able to get your information, they can actually put a credit card in your name, have it sent to their house, and they can be charging using your credit.
Yeah,
the only way you know it is if you pull your credit report.
I was going to say we have credit. One of our credit cards is Discover, and every month it puts our credit report on it, and I just love that. I just think it's a great feature, and so we're forced to check our credit.
Well, which is really good.
Yeah,
really good. And then the next thing, freeze your accounts with the 3 major credit bureaus if something doesn't look right. Right.
Yeah.
If you think somebody's got access to your social security number and your identity, freeze your accounts so that no credit can go through.
Right. And sorry, one thing I want to say, we talk about doing this for yourself, but if you have an elderly parent or somebody, grandparent, pull their credit. I hate to say it.
That's so true, Chris. That's a great point.
I had an aunt and an uncle who went into an assisted living, and, all of a sudden there was a credit card in the mail for them. Thank you for applying. Here's your credit card.
And they had excellent credit.
And someone from the assisted living stole their credit card, their social security number, and applied for all these credit cards.
Well, I'll tell you, yesterday I was on the phone because I take care of my mom's stuff. And I won't say what company it was, but she was being charged like $110 a month for her television, or one little television set, and her phone. Wow. And I said, I just can't understand how it could be. So then we went through all this stuff. They've been charging her for
landline.
No, for some kind of
internet
HD thing, and the guide. And anyway, when we got done, it went down to $36.
Oh, that's shameful.
So I told my mother this morning, Ma, I just saved you $700. It makes me mad because they only gave her a couple of months credit, and I had called before on it. But you have to really watch it, especially when you're a senior and you got used to paying $100 a month for your telephone. That isn't how it is anymore, right?
That's right.
I mean, telephones are pretty darn cheap now, about $19 a month, where you can get unlimited use of a phone. So again, that's another thing you should look at. And here's one that I bet you the Democrats wish they would have used. Don't store sensitive information on your emails. Because
just bleach them. Oh, wait.
Right?
That's right.
And then don't use unsecured networks to input some sensitive information like a Wi-Fi at a restaurant.
That's right.
Don't pull up your bank account at using Wi-Fi at an unsecured spot.
And it's so funny. We're so trained. I'm with my kids all the time. They're like, "What's the Wi-Fi password to wherever you are?" And so you wouldn't want to pull up sensitive information while you're doing that.
Right. All right. We're going to go to our phones, and then we're going to talk A to Z's about tax planning before tax season. Let's go first to Mr. Gordon. Hey, Gordon, how can we help you?
Good afternoon. Thank you for getting me through.
Yeah.
I had a question for you. I have 2 or 3 clearly underperforming little IRA CD things. They're earning like 0.0 something, and I'm over 60, and I wondered, I'd like to take them out and take that money and maybe put it back into, I don't need the cash right now. I'd like to take it out of where it is and maybe put it back into either another IRA or something.
Okay, but hey, Gordon, see, the thing is, if you take it out, are you working? Do you have a pension plan? What's your sources of income?
Working, and I'm putting into a 401k.
Okay, so may I ask approximately what income range you are with, you and your wife, if you're married?
I'm single, probably over 30.
Okay, so
30,000.
if you take the money out of your IRA, it's going to be taxable. All right.
Yep.
So, but you can roll it over into this other vehicle. You can take those IRAs and do a direct rollover where you go to the financial institution you were at and say, I want to roll this over into this financial institution, be it a brokerage house or be it another banking institution. They'll do a direct rollover. Then it won't be taxable at all, and you will have accomplished what you wanted to accomplish.
Okay, I mean, they all have different maturity dates, and I just wanted to, rather than look at 3 statements and see them all failing, I'd like to just kind of like bunch them all up and put them into one lump and put them somewhere. I didn't want to have to pay a tax penalty in order to do so.
Well, you're not going to pay a penalty because you're over the age of 59 and a half, but if you take them out, and you have them in your possession for more than 60 days, they're going to be taxable. So you want to make sure that, let's say that you find a good investment at brokerage house ABC, and you roll over the first one to ABC. Then later on, the next one matures, then you roll that over to ABC. Then the next one matures, and you roll that over to ABC. Now you got them all in one bucket, but you haven't paid any taxes. So you want to make sure you don't make it taxable to you.
The key word is roll them over.
Right, but the thing is, too, you're only allowed to do one non-conventional rollover per year.
That's right, Chris.
So if you were taking the money out yourself and then putting it in, you could only do one per year.
That's a
the
new
rollovers,
rollovers,
you can do as many as you want.
Right. So that's why you want to make sure you don't shoot yourself in the foot. Again, Gordon, you can call us anytime and we'll work personally with you. There's no charge, and then we can get into specifics, okay?
Okay, terrific. I'll let you get off to other callers. Thank you.
All right. Thanks, Gordon. Thanks for calling.
Bye.
I'm Esther Gulius, the tax lady from EG Tax, 803-0930, 803-0930-930 on a cell phone. And so, Chris, why don't you reiterate what's the difference between non-conventional rollover and a direct rollover?
Sure. A direct rollover, say you're with Bank A and you want to go to Bank B to handle your rollover. You would go to Bank B and say, hey, please, I have this money over here in an IRA. I want you guys to handle it. They do all the paperwork. So Bank A sends the money from them to Bank B. It never touches your hand.
And that's cool. You can do that as many times during the year as you want.
Right. And a non-conventional is when you call Bank A and you say, hey, I want to cash out my IRA. And so they write a check and they give you the check yourself. It's payable to you. Then you have 60 days to take that to Bank B and open up a new IRA. So you're the middleman.
You can only do one of those a year.
Correct. Only once a year.
But a direct transfer, bank trustee to trustee transfers are fine.
Correct.
Right?
Yep.
And so we don't want Gordon to end up with paying taxes when he doesn't need to.
Exactly.
Okay. All right. Why don't we go to Donna? And hey, Donna, how can we help you?
Yes, hi. I just have a question. I have a 23-year-old son, graduated from college, immediately moved to Manhattan. So his first year there, which would have been last April, he filed his income tax, and I believe he just did TurboTax. So he had a $2,000 refund coming to him, and apparently he was first notified that he needed to answer questions about his identity, which he did over the phone and said, they were fine, Mom, everything went smooth, I knew every answer. And since then, he has called twice asking about his $2,000 refund, which he can really use because he's a starving young person in New York City, and he still has not gotten this tax refund. So I was wondering if you had any helpful hints on how maybe to approach this or to move this along for him.
Well, the first thing is there's no helpful hints because if it's an identity situation, what's happened is somebody else stole your son's identity. So what happens is it kind of has to go through the graveyard of the Internal Revenue Service till they determine which was the real tax return. But that doesn't mean that you should be complacent about it.
Yeah,
And-
there's
and
an
if your son-
affidavit form that the IRS wants you to fill out, and so
Right.
I would encourage your son to call us.
Right. Why don't you have him call us? There's no charge. And then Donna will help him to get that affidavit filed with the IRS, and we'll do a three-way call. So we'll be on the phone, he'll be on the phone, and
Manhattan.
the IRS will be on the phone.
Oh, okay, interesting. Okay, thank you. I will have him do that.
All right, then any time 9 to 5, Monday through Friday, and I guess
Preferably
really
not Monday.
Pardon me?
Preferably not
Not
Monday.
this Monday.
Oh, Mondays are
Extension
Yeah,
deadline.
because it's still an extension deadline, but maybe Tuesday, and then Tiffany, you're like the queen of three-way calling.
Yeah,
right?
yeah, that's my specialty.
So I think if Donna, if you have your son ask for Tiffany, then she can do the three-way call, and then we'll get all the stuff filed, and he'll know where he is.
Oh, that would be so helpful. Thank you.
Okay?
Sort of lost. Okay,
All right. Thanks, Donna.
No problem.
thank you.
Thank you for calling. I had one of my other clients that had an identity theft issue, and it took us a year and a half.
Yeah. But you want to do all the right things, and
Right.
and sometimes
you want to make sure, because let's face it, it's kind of like playing tennis. You volley the ball into their court, then they volley it back. And you got to volley it back to their court and make sure that you got all your I's dotted and your T's crossed, because if you don't, they just say, "Oh, I guess he's not interested."
and it's
he didn't really
shameful.
want that $2,000 anyway.
it's shameful. He's such a young kid, and my God.
and you know Manhattan is so cheap. You
Yeah.
know,
And,
it's
and,
so
you
cheap.
know, the IRS is so good with it too. Ha ha ha.
Yeah,
I
right.
mean, one of our clients a couple years ago who had identity theft got a refund check in the mail for $150,000.
Oh my God.
Because they issued the wrong refund.
And I wrote on a sheet of paper to you guys over here, moving credit. I don't know if the young man moved to Manhattan for a
Right,
job.
and that would have been deductible too,
Yeah, so
as an adjustment. So when we take a look at Donna's son's tax return, we'll see if he
was
we can't get him
entitled.
some more money back too.
Exactly.
Right? I just wish I could see everybody's tax
I know
return.
you are.
I
Yep.
just wish, because you feel so bad that people would overpay their taxes, right?
Yeah.
I'm Esther Gullius, the tax lady from EG Tax, 803-0930, 803-0930, star 930 on a cell phone. We're going to take a short break for the news, and we'll see you on the other side. That's what we like, that kind of boogaloo music, right? I'm Esther Gullius, the tax lady. That's an oldie but a
We
goodie.
need that music like
Boogaloo.
on
I mean,
April
that was
10th
back
to
in
keep us going.
1967, I think, right?
I don't know. That's
Yeah,
before
I know
my
it's before
time.
your
He's looking
time,
it
but-
up right now.
I don't think you was alive then.
I was not.
I'm Esther Gullius, the tax lady, 803-0930, 803-0930, star 930 on your cell phone. We want to go through tax season stuff A to Z, but why don't we go to Gerald, who has been waiting for so long. Hey, Gerald, how can we help you?
Good. Thank you all for taking my call. Appreciate it.
Thank you.
This is on Epic. This year with the Medicare supplement, Independent Health, of course, has gone from a zero copay plan or zero monthly plan to a monthly charge for the drug plan, the same plan a lot of people are on. But the cost of the plan monthly is lower if you've applied for Epic and on it. And I got the form for Epic for my wife and I, and understand that if our income is less than $100,000, we can get on Epic.
That's right.
And I think you've had a program on it, if I'm not mistaken, but I didn't catch it. My questions are as follows. When you make out the application, you put down your yearly income.
But you know, it's
Enough.
modified adjusted gross income. So it's not just your income off of your tax return. It's your income from your adjusted gross income plus Social Security plus railroad retirement plus the taxable amount of your IRA distributions and annuities plus support money plus SSI income plus tax-exempt interest, workers' compensation, gross amount of loss in time insurance, cash public assistance and relief, non-taxable strife benefits, VA disability pensions, and lottery winnings. So it's going to adjust your adjusted gross income by those figures. And if your income exceeds $100,000 married joint or $75,000 single, you wouldn't qualify.
Oh, okay.
Okay, and EPIC stands for Elderly Pharmaceutical Insurance Coverage Program.
So unfortunately, so that's what I was wondering from the previous calendar year.
From the previous calendar year. But if you need any help with that, you can call us, and what we'll do is not Monday, if you would, wait till Tuesday. But if you'd call us, what we'll do is we'll figure out what your magi is, which is not the guys that are carrying the incense to Jesus, but the modified adjusted gross income, so that you can see if you qualify for EPIC.
Yeah, I see what's going to hurt me is the distribution, the required RMD, and
right.
But
that would be all in your AGI.
Too.
So that would have already been in your AGI. Did you file a tax return last year, Jerry?
Yeah, but and yes, I will contact you on that.
Yeah, but this way, call us and we'll go over everything with you, okay?
One question, though. So now that I know that, and it's important, there's some advantages to have an EPIC, even if you don't get a lot of things paid for, because I understand if you're on EPIC, you can change your health plan more than once a year. You can do it twice a year.
Okay.
In case you want to change your health
again,
plan.
this is pharmaceuticals, so.
Yeah, but if you have a Medicaid Advantage plan,
Oh, okay.
Right,
so
it
you're
opens
saying your
other
regular
doors
health
for
insurance.
you.
Yeah.
or
Okay.
one more switch, which
That's right.
kind of interesting.
Right.
Okay, so what I'll call you, but what I'll probably have to do is just adjust my income for
Buy those non-taxable things, right.
and then apply after.
That floor to it and see if you qualify.
A question, when you said the taxable amount of distributions, because I do give a major chunk of the RMD to charity.
Okay, so this would be the amount of money that stayed in your tool chest.
Right.
Okay, not what went to charity.
So you would have to make sure it goes directly to the
Yeah.
charity.
It
Right.
would have to be that
Direct rollover.
that from the IRA to the charity.
Right. Thank you for the information.
All right, thank you, sir.
Okay, bye.
Have a good day. I'm Esther Golias, the tax lady, 803-0930, 803-0930, star 930 on the cell phone. Hey, we want to help you. If you have any questions, if you haven't filed multiple year returns, you haven't gotten your refunds, and so and so and so forth, getting ready for next year, we want to help you. All right, let's talk about tax planning A to Z. I have pension plans. If you aren't in a pension plan, open it now and fund it, because it saves you taxes. It gives you the employer match. If you don't open it up and put some money into it, the employer can't match it, and it gives you future benefits for when you get older.
Right, and how about if you're a S corporation, a small business, you could do a solo 401k or any type
and you can put a ton away.
Yep.
And that's what's so sad, is that people don't know where to get information, so they just go, oh, it's almost like right now, the way I am watching the political things, I just don't want to see it anymore. And so you kind of like turn a blind eye to it. So I think many times when you don't know where to get good information from, you just go, oh, forget it, I'm going to let it go. And I know myself of many businesses that we've come in contact with who could have saved thousands of dollars during the year, and have been setting aside money into non-pension plans. It could have been a pension plan had it been tax deductible. It grew tax deferred, and we certainly want to help. And I tell you, at the seminar that we're going to do, we're going to have a specialist in pension plans for small businesses. And so if you think maybe you'd be interested, it's a great time to get free information.
Exactly.
All right, and then, okay, if you have children at home under age 24 and they're full-time students, and at home just means that they are crashing at your house if they're in college, when they come back, that they consider your home their home, or kids under the age of 19, and you don't, maybe you have Social Security Social Security disability, Social Security based upon income, or just child support, and you aren't working, that you should go get a job. And I'm not talking from a moral standpoint. I'm talking about a money standpoint.
Yeah.
Why would this parent want to do that, you guys?
Oh, my God, because they have kids at home, they have qualifying children, and they would qualify for the Earned Income Credit, which is a phenomenal credit. And it's on the federal and state, and it's based on a sliding scale. The more you make, the more dependents you have, up to 3, the bigger the Earned Income Credit is. And even if you just make a few
until you
thousand.
get to about 17,000.
Right. And then even if you just make a few thousand, there's money on the table. You didn't have to pay anything in to get a lot of money back.
Well, I will tell you, I would say to myself, if I go get a part-time job during the Christmas season and I make $4,000, so I'm going to get then the refundable child tax credit. I'm going to get an earned income credit on the federal and an earned income credit on the state. So and that's without any education credits. So I'm getting a refund of $3,000 that I never paid into.
Pretty cool.
So I mean, so if you're making 5 and they give you another 3, that's 8. That's enough to, move your fanny. It would seem to me, right?
Yeah,
Definitely.
Great incentive.
Okay, then the other thing, finalize your divorce. That's number C. If you're in the midst of getting a divorce, why should you get your divorce done by the end of the year if you can help it?
Because if you have qualifying children, you could qualify for head of household, and it would be a great opportunity for
Married
some of those
filing
credits.
separate, you don't have to do. You could just do single if there are no children, which opens up, different credits, because married filing separate, the government takes away credits and IRA deductions.
And how is it during tax time to talk to a dad or a mom who are in the middle of a divorce? They're really not talking to their ex. They're really not divorced. Somebody gets kind of beat up on their tax return because they really don't talk to each other. And it's kind of World War III. If it's all adjudicated before the end of the year, it's so much cleaner.
Yep.
And actually, before you get divorced, you ought to come see us, right? Because it just isn't. It's not easy, and we want to make sure that we get everything ironed out, the 8332s and things of that nature.
Oh my God! Because it just breaks my heart. There's so many people that they get divorced, and then the mom, who's the custodial, doesn't get to claim the kids ever. And the thing is that it never is fixed afterwards. It's just not fixed afterwards.
That's true. And the same thing with the dad. Sometimes the dads are paying all this money in child support, and they think, well, I just gave $18,000 in child support, and I can't claim the kids?
Yep.
Not really. Not if they live in mom's household, unless this who is the residential parent is worked out, and does the mom, that's who the kids usually live with, did she give him the right to claim the exemption? So, and you cannot unilaterally make that decision. So, if you're in the middle of a divorce, give EG Tax a call. How about another thing? Take losses to offset income, and that would be losses on your stocks and bonds and things of that nature. Maybe land that you have.
Right. So if you have a year that you have lots of gains, take advantage of some of those losses to sop up those gains, those losers.
And the only way you can do that is to actually look at your financial statement, your monthly statement that your brokerage firm sends you.
Yeah.
And if you don't know how to read it, come on in and we'll help you read it.
We have a lot of clients that do conference calls. They'll be in their broker's office and they'll call us and have us on the other line, and it really works out really well.
Right?
Yep. Or how about, maybe you are a C corporation, you own a C corporation, and it's just been losing money. Maybe it's time to pull the plug on it because that's small business stock at 1244.
That's
and
exactly
you
right.
can
a lot
take,
of people explain 1244 stock, Chris.
Sure. 1244 is a small business stock. I mean, it's your business. It's your money that's invested in the company. You're liable for it all. So if you were to close the business and you have an $80,000 loss hanging out into space because it's a C Corp, you weren't ever able to use it, that year you close it, you're basically selling it for zero. So you get to claim that $80,000 loss on your tax return. And so,
and it's all, and because it's small business stock, it's not limited to a
the
$3,000 loss,
right?
Like other capital losses, right?
Right.
This is
right.
1244 stock, small business stock, and you can take losses up to how much, Chris?
I want to say 150. No,
100,000.
100,000.
Mary joint, right?
Yep.
So that's another thing that that we can help you with. Again, if you don't know it, you can't do it.
Right. And and what a tool, like say maybe your spouse makes $150,000 a year and you're losing credits and because of the income. Well, now you claim the loss, you're down to $70,000. You just opened up the child tax credit, basically full education credit and different things like that. So.
Okay, I'm Esther Gullius, the tax lady, 803-0930, 803-0930, star 930 on a cell phone. We're going to take a short break, and we'll be back with your questions on the other side.
Over the horizon, smooth sailing, these cotton seas.
Whoa, I like that song. I don't know what that is, but I like it. I'm Esther Gullius, the tax lady from EG Tax, 803-0930, 803-0930, star 930 on a cell phone. We're kind of doing an A through Z before the last 77 days of before tax season. If you own rental property or a small business, or if you're a business owner, take a look. If you're looking to reduce your taxable income, do you need anything for the business? And again, it's need. You would never buy it if you don't need it. But if you need something for your business, now's the time to buy it because you get the benefit of the tax deduction. And you may be able to do 179, which would mean you can expense the item. So that's another thing.
And how about on the rental property, take advantage of the new law where it's up to $2,500. You can take the expense for the item.
Right, per item, which is really great because how many hot water tanks have we depreciated?
Toilets.
Oh my God.
Yeah.
Oh my God. And so this year it's a great thing. So if you need hot water tanks, this is a year to do it. You don't have to depreciate it. You can make that election. Notify New York State of Health if you're getting a subsidy and your income has changed, especially if your income's gone up. Why would that be important?
Because at the end of the year, you have to do a tally of how much you've got the subsidy for. And if your income goes up, you've probably gotten too much subsidy, and so you're going to have to pay it come tax time, and that really, really doesn't make
really
you happy.
hurts. So, here you think you got a $2,000 refund coming, and then they look at the subsidies that you've been claiming, and you think, well, I didn't know I could call them. Yes, you can call New York State of Health and say, remember me, I had income of $12,000. I just got a brand new job. I'm making $42,000. So you don't get subsidies anymore.
Right. I mean, but how about if you got married, if you were single and on the subsidy
true.
and you get married? I mean, I have a story. I had a client. He did his own return, forgot to do health insurance. The 8962, they mailed him a letter. After reviewing it, he made mistakes on his self-employment. We did the 8962, did the marriage allocation, year of allocation marriage, part 2 of the 85 of the 8962.
I know where you're going.
Mailed it in, and the IRS mailed him another bill. And we're like, what's going on? Took me 2.5 hours on the phone, 4 different people, got to a Affordable Care Act specialist 2 and said, this is the problem. It's in regards to this. And she goes, well, I'm sorry, there's nobody in the IRS to help you because there is nobody trained in the allocation of the year of marriage.
Right?
So, but yet they billed him. So, I mean, how stupid. So we're going to have him sit with Tim and Karen and do all the worksheets and send the worksheets in to prove that we were right to get the bill to go away. Because they were never trained on it.
And that's another thing. And I'm on G and my A through Z here. But, if you're having a problem with the IRS or the state of New York, you have to really be like Donald Trump and just bull through it, right?
Yep.
Don't take it personally. You just got to bull through it. Because sometimes it takes a year and a half. But if you're right, you're right.
That's right.
And that's part of what we love to do is we love to help people. The other thing, H, do your RMD. What's an RMD, you guys?
That's your required minimum distribution. So once you're over the age of 70 and a half, you have to look at your IRAs and your pensions, and you have to take out the required minimum distribution. Usually it's the entire amount in there divided by about 28, Chris?
The first year, 27.4.
Yeah.
But if you don't take, let's say your RMD should have been $10,000 and you didn't do it, what's the penalty?
$5,000.
Half of the money you should have taken out. Real important. If you don't hear anything today and you're over the age of 70 and a half, write down RMD. Don't hit a telephone pole, but write down RMD. You got to do it. All right. Roll over from an IRA to a charity up to $100,000 to fulfill your RMD.
That's right. And
Right.
like
Right?
Chris said,
So
it has
if
to
you're a
be right,
charitable
direct
giver,
rollover.
let's say you like to give $10,000 at Christmas time to your church. If you and your RMD is $8,000, you can take and roll over $8,000 from your IRA to your charity, and that will fulfill your RMD. And it won't be deductible, but it won't be taxable to you either when you do your tax return.
And that, sometimes that affects people like that gentleman we were talking to earlier with his Epic and things like that. And so it plays into other parts of your world and life.
Okay, the other thing is if you're somebody that's into passive solar, it's really important that would be something you'd want to look at. What are we talking about with credits with that, Chris and Tiff?
Well, solar, if you do the solar panels, you're looking 30% credit on the federal, 25% credit on New York State. And
So that's a lot of money.
that is a lot of money. And those credits roll, if you don't use it all, you don't lose it. It carries forward to the next year and the following year.
Now, this is not true. This is not the same thing as the energy credit.
Right, by getting new windows, new doors.
This is the passive solar credit that, and of course also for the electronic vehicles, the electric vehicles, correct?
Right, yep.
So that's kind of the same thing. So those are things you might want to look at. The other thing, put money into 529 plans.
Right, save money. Even if your children are in New York, in college right now.
You can still put it in.
Put it in, take it out. You still get a $10,000 subtraction on your New York return.
Up to 10,000, whatever you put in, right?
Right.
If you are an itemizer, make sure you pay your New York State estimate before December 31st. Why would that be important?
Because your estimated payment to New York State is a potential item you can use to write off on the state. And so make sure on the federal, that's what I meant. So make sure you get your payment in before the end of the year so that you can use that on your Schedule A and your federal, which is a great opportunity.
So let's say that you think you can owe New York State $10,000, you send it in. Because you send it in before December the 31st, it's a $10,000 itemized deduction. If you're in the 25% bracket, you saved yourself $2,500 in federal taxes.
Right.
Just when you send in the payment.
That's pretty cool.
That's pretty cool, right? Pay up all medical and business expenses and look into filing separately. And I have an example. Let's say a husband and wife, she makes 60, he makes 60, and she's got dental expenses of $25,000 and some other medical of $3,000. If they file jointly, then their floor is going to be 10% of the $120,000 or a $12,000 floor. So they're not going to be able to use any of their medical expenses. Correct?
That's right.
But if they filed separately, then her floor would only be $6,000.
Yep.
And she would then she'd have her medical of $28,000. So she'd end up with a $22,000 deduction. At 15%, she'd save $3,300 in tax savings. And if she used her home equity credit line to pay the
dental.
Because let's say for her medical she didn't have the money to pay it, rather than making payments over time, the interest would be deductible on her home equity credit line, so she'd save money there, and she'd also get a New York State savings. So the bottom line, after the cost of borrowing the money, the net savings to her would be $3,210 by filing separately.
Yep. And then I just want to point out that part of the tax law for New York State is if you itemize on the federal, your spouse has to follow suit and also itemize on. If you itemize on the state, they also have to itemize on the state. So one can't do one thing. It's the same
both
law.
People, if one is itemized, the other has to
Right,
itemize,
for the federal and the state.
Okay, make sure if you're somebody that uses your vehicle and your car, you have employee business expenses, and you're thinking that you're going to write it off on your tax return. You can't. Not if your employer will reimburse you. So make sure you do your reimbursements.
Yep. Right.
Pay up deductible expenses, real estate taxes, sales taxes, charity, business expenses. P is review your last year's tax return. Nothing like after extension deadline to come on in and we'll look at last year's return. How many times do we find mistakes? Most
70,
of the time,
80, right? Yeah.
And then gifting, if you are somebody that wants to get your estate down, you can give $14,000 per person per year. And so gifting is a good thing to do. That's Q. Estate plan, do your will. If you don't have a will, do it.
List beneficiaries on your IRAs if someone passed away.
Chris, great.
You know.
That's exactly true. Because if you don't have beneficiaries listed on the IRAs, what happens is it makes it much more difficult when they go to collect upon your death, right? It ends up being, the whole thing ends up being taxable to them.
Yep. Right to the
Right?
estate, and the estate pays a lot more money than an individual.
Other thing, look at buying a second home, especially if you're somebody who likes to go to Florida or wherever. Look about buying, because it's a great investment. Refinance. Holy moly, the interest rates are so low.
Yeah, and then
refinance.
Not to mention with the new presidential election, with the election, new president coming in, it'll be new. They think that the interest rates are going to change.
Right, I'll tell you, I'd start it now because God knows what's going to happen after November the 8th. Pay off your debt. Or move debt around to more efficient vehicles, like if you have a 5% used car loan, if you go to Pentagon Federal Credit Union, it's 199 on a used car, so you can refinance.
It's so funny when people think of refinancing, they just think of your home, but you could
but no,
refinance your car, your credit card debt.
And again, you can call us. We'll help you with that. Be ready for a slower tax refund next year. They're holding them up because of identity theft. So change your W-4 at work.
It's Christmas time. Use that extra money. Yeah.
Don't go into Christmas debt. Change your W-4. Set goals for your finances. It's really a wonderful time of year to set a goal so that you get your finances in order. Do it now. And then Z is talk to your family about your final wishes. Get them into the loop. Make plans for your estate because that's so important. You don't want to, after you're gone, you can't plan. Right. So I just had a client the other day that called me and said, I know we should have a will, but we don't have a will. And I said, hang up the phone right now and call an attorney. And we have two wonderful attorneys that sponsor our films, Dennis Kitchen and Jeff Katz. So they're wonderful. And in the meantime, if you have any questions, you can call EG Tax at 632-7886 or visit us online at egtax.com. We're here for you. And until next week, I'm Esther Gulias, the tax lady, with Tiffany Fabian, Christopher Fabian. If you need any help, we're there. Get letters. We're there. Call us. We don't charge you. We want to help. And until next week, I'll see you. This is Esther Gulias. Have a great week.